For many small business owners and freelancers, managing finances can feel like a labyrinth. Invoices, expenses, payments, it's a lot to track. This is where accounting software like FreshBooks steps in, simplifying many of these processes. FreshBooks is renowned for its user-friendly interface, making it a go-to for service-based businesses that primarily deal with invoicing. However, sometimes you encounter transactions that don't neatly fit into a standard invoice or expense. Perhaps it's a correction, an asset depreciation, or a non-cash transaction that needs to be recorded to keep your financial statements accurate and complete. This is where the power of a journal entry comes into play. As an accounting software expert, I often get asked, how do I make a journal entry in FreshBooks? While FreshBooks excels at automating much of your bookkeeping, it also provides the necessary tools for these more nuanced entries. Understanding how to create a journal entry is a fundamental skill for anyone serious about maintaining precise financial records, ensuring your books tell the true story of your business's health. Let's demystify the process, breaking it down into simple, actionable steps. What exactly is a journal entry? Before we dive into the how, let's quickly clarify the what. In accounting, a journal entry is the initial record of a financial transaction. It follows the fundamental accounting equation: assets equals liabilities plus equity. Every transaction affects at least two accounts, and in a journal entry, these effects are recorded using the principles of debit and credit. Debits increase asset and expense accounts and decrease liability, equity, and revenue accounts. Credits increase liability, equity, and revenue accounts and decrease asset and expense accounts. Don't worry if this sounds a bit complex. FreshBooks handles much of the complexity behind the scenes. Your role is to understand the nature of the transaction and which accounts are impacted. Accessing the journal entry feature in FreshBooks. FreshBooks places its journal entry feature under the accounting section, which makes perfect sense as it's a core accounting function. Here's how you navigate there. Log in to your FreshBooks account. Start by logging into your FreshBooks dashboard. Navigate to Accounting. On the left-hand navigation menu, you'll see several options. Click on Accounting. This section is your hub for all things related to your chart of accounts, general ledger, and, of course, journal entries. Find Journal Entries. Within the Accounting section, look for Journal Entries or Manual Journal Entries. Click on this option, creating a new journal entry, step by step. Now that you're in the right place, let's walk through the creation process. Click New Journal Entry. Once you're on the Journal Entries page, you'll typically find a button labeled New Journal Entry, Create Journal Entry, or similar. Click this button to open the entry form. Enter the date. This is crucial. Select the precise date on which the transaction occurred. Accuracy here ensures your financial reports reflect the correct period. Provide a description/explanation. Description. This field is your opportunity to clearly explain why you are making this journal entry. Be as descriptive as possible. For example, to record depreciation of office equipment for Q1 2025, or correction of miscategorized bank fee. A clear description will be invaluable if you or your accountant need to review this entry later. Add your debit and credit lines. This is the core of your journal entry. You'll need to specify which accounts are debited and which are credited, along with the corresponding amounts. Add a line. FreshBooks provides a button, often labeled Add a Line or simply Plus, to add rows for your debit and credit entries. Account. In the first column, you'll select the relevant account from your FreshBooks chart of accounts. This drop-down menu will list all your asset, liability, equity, revenue, and expense accounts. Choose carefully, as this dictates where the transaction will be recorded in your general ledger. Debit. If the account you've selected is being debited, enter the amount in the debit column. Credit. If the account you've selected is being credited, enter the amount in the credit column. Balance. Remember, for every journal entry, your total debits must always equal your total credits. FreshBooks will often show a running balance or highlight if your entry is out of balance, prompting you to correct it before you can save. This double entry system is the bedrock of accounting accuracy. Repeat. Add as many lines as necessary to record all aspects of your transaction. Some transactions might involve more than 2 accounts, e.g., a compound entry. Review and save. Review. Before hitting save, take a moment to review all the details. The date, the description, and critically, the accounts and amounts in your debit and credit columns. Ensure everything balances and accurately reflects the transaction. Save. Once you're confident, click the Save or Record Journal Entry button. When would you use a journal entry in FreshBooks? While FreshBooks automates much, manual journal entries are indispensable for specific scenarios. Depreciation. Recording the wear and tear of assets over time. Accruals and deferrals. Recognizing revenue or expenses in a period other than when cash is exchanged. Error corrections. Fixing mistakes made in previous entries or categorizations. Owner's draws/contributions. Non-cash recording instances where the owner takes assets from the business or contributes personal assets without a cash transaction. Intercompany transactions. If you manage multiple entities within FreshBooks and need to record transfers between them. Loans and interest. Setting up initial loan balances or recording interest accruals. The importance of accuracy. Making accurate journal entries is paramount for several reasons. Accurate financial statements. Your profit and loss, income statement, and balance sheet directly rely on these entries. Errors will distort your financial picture. Tax compliance. Incorrect entries can lead to issues during tax season, potentially resulting in penalties. Informed decision-making. With precise financial data, you can make better business decisions, identify trends, and understand your true profitability. Audit trail. Journal entries provide a clear, chronological record of every financial event, serving as a vital audit trail. While FreshBooks streamlines much of your financial management, the ability to create and understand journal entries empowers you to handle the full spectrum of your business's financial life. It transforms you from just a user of software into a more knowledgeable steward of your company's financial health. So, don't shy away from this feature. Embrace it as a tool to gain deeper control and insight into your business finances.